Bitcoin, the pioneering cryptocurrency, has taken the financial world by storm since its inception in 2009. Developed by the pseudonymous Satoshi Nakamoto, Bitcoin introduced a groundbreaking decentralized digital currency system, known as blockchain technology. This system relies on cryptography to secure transactions, eliminate intermediaries, and enable peer-to-peer transactions across the globe. In this essay, we will delve into the intricacies of Bitcoin, exploring its underlying technology, its advantages and challenges, its impact on the economy and society, and its future potential. Understanding Bitcoin. 1.1 The basics of Bitcoin. Bitcoin is a digital currency that exists solely in electronic form, without a physical counterpart like traditional currencies. It operates on a decentralized network called the blockchain, which records all transactions and ensures their transparency and security. 1.2 Blockchain technology. Bitcoin's blockchain is a distributed ledger that maintains a chronological and immutable record of all transactions. It relies on consensus mechanisms, such as proof of work, to validate and add new blocks to the chain. 1.3 Bitcoin mining. Mining is the process by which new bitcoins are created and transactions are verified. Miners solve complex mathematical puzzles to validate transactions, contributing to the security and integrity of the network. 1.4 Wallets and addresses. Bitcoin users store their digital assets in wallets, which are secured by cryptographic keys. Each user has a unique address that acts as a pseudonymous identifier for sending and receiving bitcoins. Advantages and challenges of Bitcoin. 2.1 Advantages. 2.1.1 Decentralization and autonomy. Bitcoin operates without the need for a central authority, giving individuals control over their funds and financial decisions. 2.1.2 Transparency. All Bitcoin transactions are recorded on the blockchain, which is accessible to anyone. This transparency enhances trust and accountability in the system. 2.1.3 Security. Bitcoin utilizes robust cryptographic techniques to secure transactions and wallets, making it highly resistant to fraud and hacking. 2.1.4 Global accessibility. Bitcoin transcends borders and can be accessed by anyone with an internet connection, enabling financial inclusion for the unbanked and underbanked populations. 2.1.5 Lower transaction costs. Bitcoin transactions often involve lower fees compared to traditional financial systems, particularly for international transfers. 2.2 Challenges. 2.2.1 Volatility. Bitcoin's price is highly volatile, leading to risks and uncertainties for investors and businesses. 2.2.2 Scalability. The scalability of Bitcoin's blockchain has been a concern, as it faces limitations in terms of transaction speed and capacity. 2.2.3 Regulatory challenges. Governments and regulatory bodies worldwide are grappling with how to classify and regulate cryptocurrencies, posing challenges for widespread adoption. 2.2.4 Energy consumption. Bitcoin mining consumes a significant amount of energy, raising environmental concerns and debates about sustainability. Bitcoin's impact on economy and society. 3.1 Financial inclusion. Bitcoin has the potential to provide financial services to the unbanked and underbanked populations, offering them secure and accessible means of transacting and saving. 3.2 Remittances and cross-border transactions. Bitcoin has the ability to streamline cross-border transactions, reducing fees and processing times, particularly for remittances, which can benefit migrants and their families. 3.3 Disintermediation. Bitcoin eliminates the need for intermediaries, such as banks and payment processors, which could disrupt traditional financial systems and empower individuals to have more control over their funds. 3.4 Challenges to traditional banking. Bitcoin's rise has prompted traditional financial institutions to explore blockchain technology and develop their own. In this article, we will delve into the numerous advantages of Bitcoin, exploring its potential to reshape traditional finance and provide financial empowerment to individuals worldwide. Decentralization and autonomy. One of the fundamental benefits of Bitcoin is its decentralized nature. Unlike traditional banking systems, Bitcoin operates on a peer-to-peer network without the need for intermediaries such as banks or governments. This decentralized structure ensures that no single entity has control over the currency, promoting autonomy and reducing the risk of manipulation or censorship. Enhanced security. Bitcoin's underlying technology, blockchain, provides robust security features that make it highly resistant to fraud and hacking attempts. Each transaction is verified and recorded on a distributed ledger, creating an immutable and transparent transaction history. The cryptographic algorithms used in Bitcoin ensure that funds are secure, protecting against counterfeiting and unauthorized access. Financial inclusion. Bitcoin has the potential to foster financial inclusion by providing banking services to the unbanked population worldwide. According to the World Bank, approximately 1.7 billion people lack access to traditional banking facilities. Bitcoin allows individuals to store, send, and receive funds without the need for a traditional bank account. This empowers individuals in underprivileged regions to participate in the global economy and access financial services previously out of reach. Fast and low-cost transactions. Traditional cross-border transactions can be time-consuming, expensive, and subject to numerous intermediaries. Bitcoin eliminates these inefficiencies by enabling instant, low-cost transactions across borders. The absence of intermediaries significantly reduces transaction fees, making Bitcoin an attractive option for remittances and international trade. Protection against inflation and currency devaluation. Bitcoin's finite supply is a notable advantage in an era of increasing inflation and currency devaluation. Unlike traditional fiat currencies that can be printed at will, Bitcoin has a predetermined supply cap of 21 million coins. This scarcity ensures that the value of Bitcoin is not subject to inflationary pressures caused by excessive money supply, making it an appealing store of value. Privacy and control. Bitcoin provides users with a level of privacy and control over their financial transactions that is unparalleled in traditional banking systems. While transactions on the Bitcoin blockchain are transparent, they are pseudonymous, meaning users can maintain a certain degree of privacy. Additionally, Bitcoin users have full control over their funds, eliminating the risk of frozen accounts or capital controls imposed by financial institutions or governments. Micropayments and digital content monetization. Bitcoin's divisibility enables the facilitation of micropayments, allowing for the monetization of digital content and services on a granular level. Content creators, such as musicians, writers, and artists, can receive direct payments for their work without relying on centralized platforms or facing exorbitant transaction fees. This peer-to-peer exchange of value fosters innovation and empowers creators to retain a larger share of their earnings. Financial sovereignty. Bitcoin empowers individuals to become their own bank, granting them full control over their financial assets. By eliminating the need for intermediaries, Bitcoin users are no longer subject to the restrictions and regulations imposed by traditional financial institutions. Individuals can safeguard their wealth, engage in cross-border transactions, and participate in the global economy without the need for permission or approval. Investment and portfolio diversification. Bitcoin's emergence as a new asset class has attracted the attention of investors seeking portfolio diversification. The digital currency's unique properties, such as its limited supply and decentralized nature,